Fintech company Plaid announcing a roughly $575 million funding round at about a $6 billion valuation. The round was led by Franklin Templeton, Fidelity, BlackRock. These are all new investors in the company. Plaid co-founder and CEO Zach Perret joins us right now to discuss all of this. Zach, it's great to see you in person.
Thank you so much for having me.
So big news here, $6 billion. It's a significant number. It is a haircut from sort of the peak valuation a couple years ago. Is this a reflection of market conditions? And talk us through how to think about the price tag that we're hearing about today.
So we're a business that doesn't raise capital all that often. The last time we raised money was in April of 2021. It's been 4 years since then, and as you know, April 2021 was plus minus a few months of the extreme peak on market multiples, certainly in the private markets. You've seen public companies have drawdowns of 60, 90% even sometimes. And so the reality is our business is much stronger on the fundamentals in many different ways. We've launched new business lines. Revenue has grown quite substantially. The profitability of the business has gotten quite a lot better. And yet we are impacted by market multiples as many companies are.
It was interesting to read sort of the juxtaposition. You talked about record revenue, getting closer to profitability, yet the price tag doesn't seem to reflect that. So it is more of a market reality than any sort of underlying growth of the business.
Exactly. Market multiples have compressed significantly since the last 5 years.
What does the profitability look like? And you've also sort of expanded more into the enterprise side of the fintech world. You guys are really known as the plumbing behind sort of Venmo, Robinhood, a lot of the apps out there, but you've moved more into banking. What has that meant for the top line, at least? I don't know if you're profitable yet, but talk us through what's that meant and sort of the evolution of Plaid.
So the last few years have been a big shift for the business, a big evolution for the business, I should say. We started working on Plaid in 2012, 2013. The core thesis was banking was built for a world that didn't envision the internet. And we wanted to build technology to help more people have access to financial services. So in 2013, if you needed to get a new loan, you wanted to open a new checking account, you wanted to even just get a replacement debit card, oftentimes you had to walk into a bank branch and talk to a banker to do any one of those things. We saw this missing piece of technology as an API for your bank account. Fast forward from 2013 until about 2021, 2022, that was all that we focused on. So how do you link your bank account to an application that you want to interact with? On the back end, we've integrated with pretty much every bank in the US, Canada, Europe, and UK. And then our customers are everything from Venmo and Coinbase to the big banks, the way that you open a checking account with Citi, to a lot of the large enterprises as well. So the core business was about bank linking. In 2022, give or take, end of 2021, early 2022, we started to zoom out and look at the assets we'd amassed as a business. We have a huge customer base. We have relationships with pretty much every financial institution. We have approximately 1 in 2 consumers in the US that have linked a bank account through Plaid. And we decided to focus on what were the big customer problems that we're solving, utilizing the data set and the assets that we have. So we've launched a credit scoring business, we've launched a fraud analytics business, we've launched a payments business, and those have really propelled us to this next phase of growth. Coming back to your question on profitability, we were operating margin positive in Q4, we'll be cash flow positive in Q1. And so it's really been this kind of like iterative set of steps that we've been moving towards long-term profitability.
That's interesting. 1 in 2 consumers use Plaid, so they're connecting through their bank accounts in some capacity. So you guys really are ubiquitous. It feels like that is maybe taken for granted that many people are interacting with Plaid, but it's sort of white labeled. You might not know it.
We're fortunate to work with pretty much every large fintech player, and maybe there are some out there that don't use us, but we're still searching for who they are. We're starting to work with a lot of the large banks as well. So banking and wealth is our fastest growing segment over the past year in terms of number of installs and market penetration. And then increasingly we're seeing more and more enterprises actually start to use Plaid for many different things. So the way that Invitation Homes actually does a lot of its funds transfer, that sits on top of Plaid, for example. Citi was another example that I said previously. The way that you open a bank account with Citi, we build a lot of the infrastructure to enable that. And so we've seen pretty broad growth across the enterprise and a lot of the large banks, which has led to this broader market penetration in terms of consumer usage.
And what does the revenue model look like? Remind us sort of how Plaid is making money, and has that evolved as you've sort of changed the customer base as well?
So Plaid has always been a usage-based billing model. We make money when our customers sign up new users to their apps. When those users then take action within the apps, a part of our revenue comes from each action, and a part of it is per user per month. And so basically we grow as what we think of as the first derivative of the larger fintech market. So as fintech is growing, then Plaid is also growing. But now it's become the first derivative of not just fintech, but banking and enterprise as well.
What have you seen from fintech companies? You mentioned sort of the peak ZIRP era. There was a slowdown in trading volume at Robinhood. I mean, these businesses are so different, but can you give us a flavor of kind of what's happened on the fintech side? And then we can also go to payments, but maybe we'll focus on those customers first. What has that looked like in the past couple of years?
So fintech as a market has been through a cycle. In 2021, 2020, we saw massive growth. So especially during the peak of the pandemic, people were stuck at home, yet they still needed to do things in their financial life. They needed to apply for loans, they needed to interact with their bank account. And fintech served as a lifeline for consumers through this period. That led to massive penetration growth. And you saw a lot of fintech companies growing really rapidly in 2020, 2021, first half of 2022. In the second half of 2022, as interest rates started to go up, fintech companies started to contract. This is no surprise. Lenders stopped lending as much as interest rates were going up. Borrowers didn't want to borrow, and lenders didn't want to lend at too low an interest rate. And so you saw this big contraction in the second half of 2022 and into 2023. Later in 2023 and into 2024, we saw a renormalization, and now we're in a period that I like to call fintech spring. So it is not yet the summer that it was in the past, but winter is largely over. We're seeing a lot of optimism. Also around now is we're seeing kind of the fastest rate of new startup formation in fintech, which is great, that we've seen in a couple of years. We're seeing a lot of the mid-stage companies raise great rounds and have a lot of trajectory. And then we're seeing some of the late-stage fintech companies actually prepare for IPO. And so I would say there's a lot of excitement all around. We're still yet to see some of these big proof points, to see some of these big IPOs hopefully coming soon. But there's a lot of optimism.
I want to ask about your IPO, but while we're talking about the consumers and sort of behavior, what can we glean from Plaid in terms of spending, the health of the consumer? There's so much focus on some of the macro data, whether it's retail spending. What can you tell us about the health of the U.S. consumer?
So we're fortunate to work with a lot of companies across fintech and financial services and even broader now. And the way that the consumers are reacting right now is fairly mixed. So we're seeing some use cases grow incredibly quickly. Some have periods of spiky growth, as you can probably read in the news, and then have slowed down. So crypto, very lumpy right now. Investing, very lumpy. Lending, the sector is largely coming back. They're certainly not at the pace that it was when the interest rates were lower. And then across the more core consumer apps, there's very strong sustained usage across things like budgeting, things like expense management, a lot of the B2B use cases as well. So overall, I would say mixed.
What about direct payments? Are people trying to avoid higher rates? And what does that look like in your portfolio?
So we build a product that allows consumers to link their bank account and pay for things with their bank account. Think of the way that you pay a utility bill. Oftentimes that's going directly through your bank account, and we make it a lot easier for that to happen. What we found is that the rate of payments is fairly consistent, fairly predictable, especially in the areas that we play, which are largely in utility, recurring bill payments, rent, things like that. There's not a lot of volatility going on right now.
Can you see credit card repayments and things like buy now, pay later? Are people paying off their debt?
To be honest, our data doesn't actually cover that.
Okay, fair enough. You mentioned IPOs. Why not go public at this point? You sort of said here that you're not planning to raise more ahead of an IPO. How did you think about the potential of going public, and what's the roadmap?
I think an IPO is absolutely our path over the coming years. We haven't assigned a specific timeline to it. I think we still have a lot of internal work to do to get ready for it. So, being prepared, being ready for all the reporting that's to come. We haven't done that internal work, so we're not yet ready, which is why we didn't consider it right now. I would say our broader arc over the next, call it 2, 3, 4 years, definitely planning to start to do that work and get prepared for it. We think that being public is important long-term for the company, but we haven't yet assigned a timeline.
Is any of the market volatility playing into that? I mean, the last couple of weeks at least have been extremely volatile, and you've seen kind of some of the tariff worries. As a CEO, how do you think about taking that dive and Plaid eventually being subject to that?
Well, as I said, we're not yet prepared to do an IPO, so I haven't been analyzing the current market conditions in light of what we might do for an IPO. Over time, I think volatility is definitely going to be one of the key deciding factors as to timing for us. But again, we're not in that decision-making mode yet.
And the news this week about the secondary. So part of this is to get employees liquidity. Talk about the options out there to allow some early employees to really be able to cash out, and how that's kind of changed I guess, the market out there? It seems like there's more options. You don't necessarily need to go public because you can do these massive rounds in private markets. What has that been like for you?
So Plaid was founded more than 10 years ago, and we've had a lot of kind of employees with us on this journey. The reason for the fundraise was twofold. First is that we issued RSUs starting many years ago, and we have an RSU expiration coming up, so we have to actually flip those RSUs into shares and then allow our employees to pay taxes on it. So that's the large motivation for the round. This is something that you've seen a lot of late-stage private companies do. So Databricks did this kind of thing fairly recently. A handful of others have also done it. So that's the motivation for the round. On top of that, we'll also allow employees to do some secondary, and we think it's important to give our employees options to sell and the ability to have liquidity on this, especially given that Plaid has been private for so long. One day in the public markets, this will be something that's sold for us, but in the meantime, we're fortunate that the private markets are very open to this kind of thing right now.
And there seems to be a lot of demand. We mentioned the new investors. There's a lot of new names on the cap table. What was demand like, and what did you see from sort of the later stage players, Fidelity, BlackRock, that got in at this point?
So this was an oversubscribed round. We're fortunate that we got to go out and build relationships with a lot of funds that we hadn't talked to before. So if you'll notice our cap table, historically it was largely driven by major VCs. We didn't talk to a lot of the crossovers in the past. So because this may be our last round before we do an IPO, we wanted to take the opportunity to get to know a lot of the crossover investors, a lot of the public funds. We're fortunate to have amazing leads for the round coming in. So folks like Franklin Templeton, Fidelity, BlackRock. We hope that this is the start of a very long-lasting relationship with many of those firms. The appetite for late-stage private is very large across many of the investors out there. And as I said, this round ended up being meaningfully oversubscribed.
How has that changed in the 10 years that you've been private? Have you noticed a change in demand? Market conditions have changed, but sort of stepping back in your seat, what have you seen in terms of the evolution of private markets? Has it been easier to raise capital? You're obviously at a different stage, but maybe give us your take on that evolution.
Certainly the long-term expectation for the business in terms of the speed to IPO and in terms of the availability of capital in the late-stage private markets has changed massively. So we started the business end of 2012. And at that time, it was expected you start a business, you work really hard, you try to IPO it within 10 years, ideally you IPO it within 7 years, because there just wasn't enough capital in the late stage to really support companies at the size and scale of Plaid and at the size and scale of many of the other late stage private companies. Today, this shifted massively. You've seen a lot of the public funds come in and start doing late stage private. And I think that is beneficial to a lot of the companies. It allows us a little bit more time to make aggressive bets, to really lean into some of these bigger swings that we might want to take. Our long-term ambition, as I said, is to, yes, get through that IPO, but it's given us a little bit more time to really be prepared to do so.
And you guys at one point were also an M&A target. There was the Visa deal that fell through. Are you thinking about M&A, whether as an acquirer, or have you gotten other offers as you've been a later stage private company?
So there's certainly been interest in acquiring the business. I think from our perspective, our focus is on kind of building a long-term independent company, maximizing the growth rate, and more importantly, maximizing the impact on our mission. So our mission is to expand financial freedom, and that is really what we're focused. We're going to make decisions with that in mind. From us acquiring other companies, we've done a couple of important acquisitions in the past. We acquired an IDV company a couple of years ago, and that's been a big driver of growth to the business internally. We're certainly looking towards doing more over time. There are no specific targets in mind yet.
Got it. That's helpful. You mentioned some of the fintechs that are starting up, and that it's spring, I guess, as you described it.
Fintech spring.
It's spring, fintech spring. What's driving that? Is that AI enabling some of these companies to be leaner, and what do you attribute that to?
I think there's a handful of factors that go into it. First is the fintech market is more mature. There's higher quality infrastructure built by Plaid and built by many others that are out there that make it easier to actually start a fintech company now than it would have been in many years past. Second, there's been a shift in the regulatory landscape. So the partnerships between fintech companies and banks was really hard. It's getting a little bit easier right now, and so we're starting to see a reemergence of many of those businesses that require bank partnerships. I think that, yes, there's certainly an acceleration of AI. I think also the capital markets are much more open for business right now. So there's definitely a pullback in investing in kind of 2022, 2023. There's now a reacceleration of that. You see the gigantic banner numbers certainly coming from the AI space, but we've seen very strong investment going into fintech along the way.
How are you guys using AI internally? Has it allowed you to hire fewer engineers? I don't know if you're familiar with vibe coding. Is that something you guys are looking into or utilizing?
Very familiar with vibe coding. We have leveraged AI in a big way internally, and then we're starting to leverage it in a lot of our products as well. So initially just leaning into tools to make our engineers more efficient. Coding tools, Cloud Code is a big one that we're spending time on right now. And tools to make our support team and our customer-facing teams more efficient. So if we can allow a support rep to respond to a customer question quite a lot faster, that's a thing that we absolutely want to do, and a thing that we've been doing for a while. As it relates to our products themselves, we have an anti-fraud team that is just focused on solving fraud out there in the fintech ecosystem. And as you know well, deepfakes have been a thing that have really taken off. Yeah. When we talk to a lot of the players out there, we hear that financial fraud is growing at something like 20 to 25% per year right now, which is terrifying. And so we've been leaning in to try to build tools to combat deepfakes, to combat a lot of the AI-driven financial fraud. Unfortunately, this is a large market opportunity. It's something that we'd actually like to be smaller, but this has been an area of a lot of focus for us. Is
it helping profitability, and has it improved your margins to use AI and maybe make engineers more efficient? What does it look like for your balance books?
Yeah, we're certainly on the path towards it helping. I think for the most part, we haven't removed engineers and replaced them with AI by any stretch. Largely what we're doing is making our existing engineers much more efficient, giving them better tools to move faster. What I will say is on the support side, it's allowed us to hire a little bit more slowly there. We have tools that help our support team respond to requests faster, which means that we don't need as many support people over time.
Are you seeing that across the ecosystem in Silicon Valley? Maybe eventually lower hiring or just less need for the immediate engineers that you might have needed when you started Plaid?
I think it's hard to say. I think there's one argument where you could say, Silicon Valley companies will not need to hire as much, or they can do just as much with less engineers. Another way of thinking about it is if an engineer is twice or three times as efficient, you can just build more stuff. And my hunch is that a lot of companies will end up somewhere in between. So perhaps, yes, the pace of hiring might come down a little, but my hunch is that most people will lean into just doing more and building more. Our ambitions are endless as Plaid. We see so many products that we want to build. We hear so many customer problems that we could go solve. And so we would lean more towards solving more of those problems as opposed to having a smaller staff. Are
you using vibe coding? Have you experimented with any?
For fun on weekends, yes. Yeah. It's been fascinating to watch.
I'm new to this term, so I'm learning more about it. That is super interesting too, and it'll be a theme to watch. In terms of expanding, maybe moving into different areas, have you thought more about financial services and maybe moving into Visa's territory, whether it's debit, whether it's more direct payment capabilities? What does the future look like on that side?
So for the most part, we see Visa as kind of an amazing partner, an amazing friend. From our perspective, we have meaningfully expanded our product suite, but not directly in that sense. We've gone from just doing bank linking, as I said before, to expanding into building anti-fraud capabilities, anti-fraud tools, again, fighting this massive increase in financial fraud. We've launched a team to focus on credit analytics and credit scoring. We believe that we can meaningfully increase the quality of a credit score by looking at real-time data from a consumer. So whereas if you were to change jobs and get a much higher income, it might take a very long time for that data to actually trickle through into your credit score. We've built some tools that actually allow us to recognize income of a consumer and then put it into a credit file, put it into a credit score at a much more rapid pace. We've also launched some tools around bank-linked payments, largely though for utility bill payments and existing recurring subscriptions, and then some analytics that sit on top of that as well.
That's something that Max Levchin from Affirm has brought up too a bunch of times. It's sort of the death of the FICO score and how outdated that is. Do you think it'll eventually get to a point where there is more real-time data where you can assess creditworthiness just in a better way?
I think there's a lot of opportunities to improve the way that we assess credit. If you were to lend to a small business, you would evaluate their creditworthiness based on their ability to pay, which would be measured by their free cash flow. For a consumer, we measure their creditworthiness based on their history of payments back, based on their history of repayments. it might actually be easier to measure a consumer's ability to pay based on their free cash flow, except the data hasn't actually existed in that format. So we've built a set of tools that allow a lender to understand a consumer's free cash flow. Basically, it's their income minus their recurring expenses, and make a loan based on that data.
That seems a lot more relevant for a lot of people. It seems like, is the FICO score going to be around in 5 or 10 years?
It's hard to say how credit scoring is going to evolve over the next many years. We think that there's certainly room for evolution, but it's hard for me to predict exactly what it's going to be.
Fair enough. You mentioned some of the administration, or just at least things getting easier on a regulatory side for fintech. Are there any changes with the change in the White House, the Trump administration, that are making it easier for you to do business? And what effect has that had?
I think it's a little too early for us to tell. We've certainly heard that there is a little bit more clarity coming through a lot of the banking regulators, which means that a lot of our partners are getting faster answers. They're able to move a little bit more quickly, and that feels good for fintech as a whole. For us specifically, it's a little too early to tell if there are any major changes afoot.
What would be a big win if you did have one top thing on the wish list to change in the next 4 years? What's your priority?
So there's been a regulation that's come out of the CFPB at the end of last year called Dodd-Frank Section 1033. The rule was written by the CFPB at the end of last year, and that rule is scheduled to go into effect at some point this year, and then kind of with some rolling deadlines after that. Getting to clarity on exactly what's going to be in that rule, what's not going to be in that rule, what the bank requirements are going to be, what's not going to be in that, that would be very helpful. So I'm excited for that to land, hopefully in the coming year or two.
And that seems to be consistent with what I guess the crypto industry was also looking for. It seems like clarity was sort of the buzzword of the last year. Have you seen crypto partners be able to grow faster, and what's your expectation for that side of the business?
In terms of the absolute growth rate, again, I think it's still a little too early to say, but I will say that the companies that we talk to, the crypto partners that we have, they're very happy about the increased clarity that they're able to get, and they feel like they're going to be able to operate much more clearly in the future.
What about FedNow and real-time payments? How does that work with the cloud? Because I think when that started to become a reality, people worried that it would sort of disrupt Plaid or make the ability to link your bank account or that use case, like you wouldn't need it as much. How has it actually affected Plaid, if at all?
So FedNow and real-time payments, two versions of making bank direct payments faster. It's a massive opportunity and something that we've really missed on. I think that as a society, we can lean more and more into these faster bank link payments mechanisms. My hope is that FedNow will see increased acceleration with the current administration. It remains to be seen. I'm not sure if it's a priority there or not, but I can always hope for faster adoption on FedNow. I think FedNow is something that a lot of the small banks see as an important step forward. It's a new revenue line for many of these smaller banks. And so hopefully we can see more and more implementation of that. Of course, expansion of RTP, which is the clearinghouse's version of this faster payments mechanism. We're hopeful for that to move forward as well.
And does Plaid sit on top of that, or how does it affect, like where do you guys sit in that ecosystem? I picture it as sort of this direct link that you might not need a Plaid. Is that the case, or how do you think about it?
Not quite, but it's a great question. So Plaid, we help you link your bank account in order to make a payment. So if let's say you were my landlord and I wanted to pay you as my landlord, how would I go about linking my bank account so I could actually make that payment? Plaid does the linkage, and then behind the scenes, the way that the money actually moves, that sits on top of today the ACH network, and in the future the RTP or FedNow, one of these faster payments networks.
Super interesting. We'll end on just trends in the business. Where are you seeing growth? Where are you seeing pullbacks? Maybe just give us a sense of the biggest growth area for Plaid.
So it's mixed. We're seeing growth in some pockets of fintech, moving really fast. And then we're seeing a lot of growth at the top end of our business. So with the largest banks actually installing Plaid, and then a lot of the large enterprises. Throughout the middle, there's still ups and downs. So some of the lenders are doing super well, some of the lenders are not doing as well. Some of the investment companies are doing well, some of them are not doing as well. But on the whole, we couldn't be more excited for kind of the directionality of growth in the future. We're very excited for the new business lines and very excited for the upmarket push that we've made over the past year.
And JP Morgan is an investor, so things are good with Jamie Dimon. He's kind of taken shots at Plaid in the past. You guys are good. You're on good terms.
JP Morgan is an investor. We're fortunate that our partnerships with many of the large banks have gone very well and have continued to evolve over the years. What I will say is, as this 1033 regulation starts to go into effect, as we start to get greater clarity on exactly how the CFPB is going to regulate that, there will be more iterations and an expansion hopefully an expansion of our relationship with many of the top banks.
Well, it's great to see you. Thanks for walking us through all of this, and we'll keep bugging you about an IPO, but no news yet on that side. But thanks for bringing us the funding news, and we'll see you soon.
Of course, thank you for the time.